In 1980s, two of the richest men in the world, the Hunt brothers, tried to corner the silver market. They failed. They were crushed by the regulators, sued by the bankruptcy, and became the cautionary tale of greed. Everyone thinks the 1980 silver crash was big, but what happened in early 2026 was a masterpiece of financial destruction. Silver didn't just rise, it ascended. It went above 120 an ounce. Media portrayed silver as a gold on steroid and that it will power the future, which I think it will, but it created a perfect storm for demand. But here's the anomaly. In 1980, the system fought the big player to save the market. In 2026, the system appeared to do the exact opposite. While your neighbor was using leverage to buy silver at 110, the smart money was already walking towards the exit. If the supply deficit was the highest in 60 years, why did the price collapse by 50% in 7 trading days? This isn't just about the price drop. It's about how the 1% successfully orchestrate the greatest wealth transfer of the decade, while the public was distracted by the bright news. This is the architecture of a trap. To understand the crash, you have to understand the signs of failure. And here's the thing. Think of the stock market as a massive ocean. The giant tech companies are the deep seas. But silver is a shallow swimming pool. If a billionaire tries to dump $10 billion worth of silver at once, they will create a splash. The price would crash before they could even finish the trade. And this is where the silver mob comes in. In early this year, while the bright headlines were screaming about a silver shortage, the shadow data, the institutional on-balance volume, was actually dropping. The 1% needed a mob to soak up all their sell orders. They needed millions of small investors to buy the breakout so they could sell their massive portions without moving the price. The public wasn't investing. They were providing the exit door for the people who actually own the building. Credit is the oxygen in the market. And by late January, the oxygen was being sucked out of the room. Why was this allowed to happen? To answer that, we have to look at the incentive structure. In finance, we have the ATM model. The stock market is like your drunk uncle, loud, erratic, and unpredictable. But the bond market, that's the designated driver. In early February 2026, the driver got a massive bill. The interest rate spiked, and the big banks suddenly needed billions in cash to cover their failing bond bets. Where did they get the money from? They go to the ATM. And in 2026, silver was the ATM. On early February 2026, the referees of the silver market flipped a switch that wiped out millions of investors overnight. The CME Group announced they're raising the margin requirements to 18%. Now, for a regular person, 18% sounds small. But for a trader using leverage, this was a death sentence. It meant that for every 100,000 of silver you owned on paper, you suddenly had to produce 18,000 in cash overnight. This wasn't to protect the market. It was a margin trap. The system knew that the retail public didn't have the cash. This forced the forced liquidation. Millions of ounces of silver were dumped into the market at once, not because people wanted to sell, but because the referee forced them to. And who was standing there at the bottom waiting to buy that silver back at 64 an ounce? The same institution that sold it to you for 120. If you're holding physical silver in your hand, you're fine. But if you're holding a paper contract on an app, you were wiped out. But there is a deeper layer to this story. A man named Dr. Julian Vane warned us about this 30 years ago. In 1994, Vane wrote a paper arguing that the financialization of the commodities would turn the world's essential resources into collateral slush funds. He warned that one day the price of the silver wouldn't be determined by the supply and demand, but by how much liquidity a bank needs to cover a bad bet in a bond market. Vane was forced out, his data was debunked, but in 2026, his prophecy became reality. The 2026 silver crash wasn't a failure of the market. It was a masterpiece of financial engineering. Thank you for watching. I'm Sean. And if you really enjoyed this video, then please press the like button. And if you'd like to know what's coming up next, then please don't forget to subscribe. Thanks for watching and see you in the next one.